When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide out this month titled Building Your Emergency Financial Binder. And really, Mike, we're talking about, a set of documents that someone needs in the event that something really bad happens to them. And one of the questions that family members and friends always ask is, who should I call if that happens? And this binder should have that information in it.
Yeah, it's designed to be that one-stop shopping of, hey, what do I go for? Any number of different things that could happen, right? I mean, it could be an accident that lands me in the hospital. It could, unfortunately, be my passing. But you want a consolidated place where loved ones can go to try and find, hey, what are my first points of contact that I should make?
What are those points of contact that should make their way into this binder?
Well, I think importantly, tax preparation, estate planning, and financial advice are three of the big ones that I can think of off the top of my head. The problem is who does that and how spread out it is varies dramatically person to person, right?
Sure.
If I have 5 different bank accounts for different things, that is going to be more complicated than if I have a single bank account at a single place and then an investment advisor that's overseeing all of the investments. But again, your results could vary.
Folks, the guide this month is titled Building Your Emergency Financial Binder, and it has all this information and more in it to make sure that you are leaving a comprehensive guide for what happens if you're going through an emergency. Way to get this guide? Call 800-393-4001, or you can also request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you as we kick things off here, and we'll touch on comings and goings in the Middle East and what's happening there. But I want to start just with kind of a broader look at what we are seeing in markets that was spurred by this piece from the New York Times titled "Markets Have Faced a Year of Chaos and Still Have Done Awfully Well," which is entirely true. And this is the thing that I come back to on a lot of this, which is look, just because you're nervous about something or just because you're feeling uncertain about it doesn't mean that that thing is definitively going to make markets go down. And we've had a number of these different things over the last year that we have, mentioned concerns about, whether it be tariffs a year ago, whether it be AI-related job loss, whether it be private credit, whether it be Middle East conflict. And it's not to say that eventually you won't get to like a straw that breaks the camel's back. But if you look at the last 12 months here, and again, I'm just looking, 12 months now, the S&P 500 during that time, and granted, this is coming from, basically the bottom last year, so I know that this is skewed somewhat, but S&P during that time up 36%, Dow Jones up 26, NASDAQ up 48, Russell 2000 up 48. International indices, the MSCI Emerging Markets Index up 53, MSCI EFA up 37, MSCI Japan up 44, MSCI Europe up 34. So, again, I know that some of this is coming from the Liberation Day lows, but even if you wanted to look at, last 3 years, which takes us back to concerns about Silicon Valley Bank and stuff like that, you've got all major U.S. markets up anywhere from 42 to 90%, and major international indices that I mentioned up anywhere from 42 to 60%.
Yeah, the last 12 months is an interesting timing question, too, because April 9th is literally the day that the president announced he was pivoting away from his Liberation Day tariff. So it was Liberation Day was April 2nd. It took him a week before bond markets freaked out and he had to pivot. And I think, Chuck, it speaks to a truism that we've all experienced in markets for multiple decades, which is there can be a lot of geopolitical tension, and there's always those potential problems on the horizon, but oftentimes they come and go without disturbing markets.
Now, if you want to look at the interesting thing about this year, for all of the, hype of, GDP growth is going to be through the roof this year, and all of the fear of, the Middle East is going to, make markets collapse, to this point, basically nothing's happened, and this is the wild thing in markets this year. The S&P 500 is down about 1%. The Dow Jones is down 0.5%. NASDAQ Composite's down 3. The Russell 2000's up 5. If you told people, after the first 3 1/3 months of the year, your indices on average would be down like 1%, they'd be like, oh, so, not a great start, but pretty boring, year so far, right?
Chuck, I'll go further than that. Not only are they only down 1%, they weren't all that volatile given everything going on. At worst, They were down 7.
The president said it himself. He said, I'm kind of surprised that things weren't worse in markets. He's like, I thought things might get a little bit worse than they did. Yeah. So I think that when you look at, where we stand right now, markets, and remember, ultimately markets are fueled by, equity markets are fueled by the earnings generated by the companies within them. And in the aggregate, the earnings have been good, mostly driven by tech. That's where we've seen the biggest earnings growth. But overall, that is what is effectively pushing this market forward. And so I think that when we look at it and, look at, again, kind of where that earnings growth is coming from. So taking a look at, through Q4, the year-over-year earnings growth, tech is the biggest one, and this is data from FactSet on March 27th. Tech earnings were up 33% and change through Q4. So basically like full year 24 to full year 25, up 33%. Industrials up 23%. The S&P earnings up 13.9%. So again, like that's the driver's seat, like those companies there, and really even within tech, it's the AI tech companies. You then have, 3 other sectors with good earnings growth rates. I'll qualify the long-term average for the S&P 500 earnings growth is around 7 to 8%. So anything, in that ballpark or higher, I'll say is good. Communication services, materials, and financials all came in between 8 and 13%. It's good.
Yep.
You then do have the 6 sectors that have lagged with, utilities, consumer staples, real estate, energy, consumer discretionary, and healthcare earnings grew anywhere from 0.5% to 3.9% last year, which is not great.
Right.
You know, like and specifically when you look at consumer discretionary coming in with 0.8% growth, that's something where you say, okay, like there's a problem because this is not being a consumer, driven market. It's not consumer spending that's driving it. It's corporate industrial spending that's driving it. Right? It's the AI trade that was the dominant one, and that's reflected in the earnings growth.
Sure.
So the question for this year is going to be, hey, where do you think the earnings growth is going to be? We're seeing upward revisions to S&P 500 earnings estimates right now, largely because energy earnings growth is, surprise, expected to be very high now, whereas before the Iran conflict started, it was not. It's unclear to me that the disruptions from the Iran conflict are being appropriately priced into other sectors right now. And so I think that's something to watch because what we've seen to this point is effectively a month ago, you saw earnings projections for the year coming in, again, like this is all from FactSet data, so they aggregate all these earnings estimates, and that's what I'm using here. If you go back to March 6th, earnings growth estimates for the year were 15%. They're now up to 17.1%. That's mostly, almost exclusively, because of upward revisions to projections for the energy sector. We'll see if there's downward ones that come through anywhere else. We'll just have to watch. Let's take a quick break now. When we come back, we'll pull back from this long view of things. Instead, we'll talk a little bit about what's going on now in the Middle East and whether a ceasefire can make a difference in the American economy from here on out.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
See you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
All right, Mike, want to talk a little bit about kind of where we are right now from a ceasefire perspective and dovetail it into this piece, what a lasting ceasefire would do for the American economy. So I thought a lot about this over the course of yesterday, as you would expect, because it's kind of a big deal. And here's where I landed, is ultimately a ceasefire that ends up lasting is something that has the potential to provide relief for Americans as far as some of the prices they've already seen go up, as far and beyond that, some of the prices that haven't yet gone up that are likely to in the coming weeks and months because of just how long supply chains take to get everything into the system. But we've got this air pocket that's just sitting there in the flow of oil globally. And what I mean by this is right now, and this is before you even get to ships coming in and out of Hormuz, you've got 12.5 million barrels of production per day offline in the Middle East.
Okay.
Because they don't have anywhere to put the stuff.
Yep.
There's nowhere to put it, so they have to plug the wells. And so every day we're adding another 12.5 million barrels a day, which I did the math. I did the math. And what you get is, over the course of April, that equates to 375 million barrels, plus the 300 million that was shut in March because it ramped up over time. And so by the end of April, you're talking around 700 million barrels as a gap. Beyond that, and this is data from Rory Johnston, who's an energy analyst, it takes a couple months in order to actually get wells that are plugged back to full production capacity. So where you end up with is the best case scenario at this point, in my opinion, is somewhere around May 1st, you get those wells unplugged and producing again. And even if that happens, you're talking about 1.1 billion barrels of oil that's not produced this year.
Okay, so that's our estimate on the supply side. Shift over to demand side.
The demand side hasn't been particularly impacted yet because generally people have to get where they're going. And so unless there is an absolute shortage, people say, okay, I have to pay up for this. The estimates that we've seen are that what we call demand destruction, basically people saying, no, I'm not going to pay that anymore, doesn't start until gas gets into the $5 a gallon range in the United States.
Agreed.
Now, in parts of it, it's already there. California, you can look at it. Again, the AAA national average right now moved up overnight to 416 and 6/10. California's at 593.
Yeah.
Okay, so California is feeling it already right now. A month ago, California was at 493. So, you've seen a big move up. Diesel continues to move up. We're within sniffing distance of all-time highs.
I'll make a case that's difficult to measure, but I'll make a case that 2 to 3 year global demand for oil looks higher now than it otherwise would have been due to SPRs and just general security concerns about the Middle East.
I would agree. So here's the thing. Like, when I look at what a lasting ceasefire would do, the reason why you're not seeing any improvement in oil right now and why it's actually rallied about 10% off its low from yesterday is because, again, the initial reaction from markets is, great, this is going to get the oil flowing again. The problem is, if you are a company that owns a tanker ship, tanker ships cost anywhere from, the big ones cost anywhere from like $100 to $200 million to operate.
Yep.
In this environment right now, which is a crazy environment, tankers are getting anywhere from like $200,000 to $400,000 a day in order to operate. Let's take the midpoint of that and call it $300,000. If you can run that tanker ship, again, you're not going to run it every day for a full year, but let's just say it's, hey, working days. Just like you and I go to work 5 days a week, let's say it's 250 working days a year. You're talking about $75 million a year that you can make running that tanker ship at this point. And again, that's 1 year. That's not even extending it out. The companies that are looking at this, and people say, well, like, they can get insurance and this and that. Okay, great. The insurance will cover the cost of the ship, but it's not going to make up for the lost revenue while they are, if the ship is at the bottom of the Persian Gulf, if it gets sunk because the ceasefire breaks now. And I'm not saying it will or won't, but if you own one of these ships, the calculus that they are making, and this is, again, what I've heard anecdotally from people in the region, is, hey, we're just going to wait because right now we can either go pick up a load somewhere else and get paid really well, or we can sit here and wait for a little bit to have a little more clarity. And so the last thing you want to do is start moving into Hormuz, have the ceasefire break down, and now you've got another tanker stuck in there that you can't make any money with.
So Bloomberg is citing that as of Wednesday, some 7 ships, all with previous ties to Iran, were able to navigate through the strait and into Thursday morning. As we've talked about, normal transits in both directions are, 130 to 160 per day, generally speaking. So
yes,
obviously, we keep coming back to that same narrative of what matters here is not words, it is actions, and the most important action is ships navigating the strait. That's not to say that yesterday's equity market rally was illogical. I think what happened yesterday in equity markets was a clear worst-case scenario temporarily taken off the table. Right? The worst-case scenario was a dramatic re-escalation of attacks on infrastructure in the region, and at least for now, that scenario was taken off the table, and so I think equity markets responded. We'll see if they responded too dramatically, but I think all of this is logical, and now with oil prices back to where they were about a week ago, or a little bit more than a week ago, that's also pretty logical. Hey, we're not going to start bidding down oil prices until we actually see ships safely navigating.
So markets are trying to look through this and say, okay, like, here's how we see a positive outcome occurring, but oil markets are, remember, there's a difference between markets of physical commodities and markets of financial instruments.
You don't have to take delivery of your Amazon shares.
Correct. At some point, there's an airline in Europe that needs jet fuel. At some point, there is a shipper in Vietnam that needs bunker fuel. And this is why you are seeing, I look at Brent crude. Again, the West Texas Intermediate's moving more dramatically today, but I don't think that's the signal. Brent crude got down to 90 a barrel yesterday. It's back up to 98. It's an 8% rally, almost a 10% rally in a day. This is something, like, it's telling you something about the potential concerns in the short term. Because remember, when we talk about the price of Brent, what we're looking at right now is the June futures contract. That's what's the one that's cited. It's called the front month contract because it's the first month of the futures market. The longer term markets, okay, are not pricing back to there yet, but they never got up as high as that anyways. If you look at the December Brent future, where you ended up, its peak was on March 31st, actually, at around $88, $89. It has spent the last week basically hanging out right around 80. Again, this is not a prediction for where the market will be. This is what you want to pay now, or what you can pay now, if you need to take delivery in December. So basically where the market is going, in my opinion on this, is crude price, like we're going to wake up very quickly and realize, hey, if you don't get oil out of Hormuz in the next 2 weeks, it will not be able to make June delivery for Brent crude. It takes 30 to 40 days to make that trip. And so this is the reality that we're waking up to here, in addition to the barrels lost, which is, hey, there still is a real energy crisis that is hitting. We don't feel it here in the United States because of where we get our oil from predominantly. It is already hit in Africa, it is already hit in Asia, and it is hitting in Europe over the next 7 days here. And it's unavoidable at this point. There's an air pocket because that oil has simply not been produced. We've now worked through basically all of the floating storage that's out there. Floating storage being tankers that are en route and stuff, aside like excess ones. And now you're starting to see the on-land inventories being worked throughout Asia and Europe. And so this is where we're still heading, is for some real problems that are going to become apparent there. It's just a question of, hey, can you get a lasting ceasefire that makes those problems a 1 to 2 month air bubble in oil markets? Or do things, struggle to get across the finish line, and this turns into, a quarter-long or 2 quarter-long bubble, and then you've got some real problems because the world simply cannot operate on 10% less oil, let alone, we're not even mentioning the nat gas and the aluminum and the fertilizer and all this stuff. We're just talking oil here. There are problems if this is extended. So what a lasting ceasefire would do for the American economy, it would make this a short-term, more severe problem, and long-term, more, minimal one. But if it doesn't happen, then you still are right back in the position we were in a week ago. Quick break here. When we come back, we've got Wall Street Watch next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead, and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, after yesterday's strong rally, markets today are modestly pulling back, with oil jumping higher after Iran accused the U.S. of breaching their ceasefire agreement. Investors are also bracing for tomorrow's consumer price index for the month of March. Right now, the Dow is down about 0.33%, S&P 500 down just over 0.25% lower, NASDAQ down by over 0.4% to 101 points, Russell 2000 down about 0.4% as well. 10-year Treasury yield up 2 basis points at 4.313%. And oil jumping 7% higher now, trading at $101 a barrel. Shares in AI computing company CoreWeave falling 4% after the company announced a $21 billion expanded infrastructure deal with Meta. Meta stock is climbing by 2%. Meanwhile, the Wall Street Journal reported that Disney is planning to eliminate as many as 1,000 positions in the coming weeks in one of the first significant moves under new CEO Josh D'Amaro. Disney shares off by about 1%. And shares in Modelo and Corona beer maker Constellation Brands are rising 5% despite the company withdrawing its guidance due to uncertainty and reported subdued demand. Constellation Brands also logged lower revenue in the previous quarter as demand for its alcohol remained weak. I'm Tucker Silva, and that is Wall Street Watch.
Final piece, just wrapping up ceasefire talk for the day. Look, through this whole thing, I've said I have no idea exactly how negotiations or anything are going to go, and I maintain that. What I will say, the next few days is pretty critical in terms of, hey, can this ceasefire hold? Can you start to see some progress that is being made? And specifically then, like when we talk about progress being made, is there a meaningful flow that starts to resume through Hormuz that allows for that shut-in oil production to start coming back online towards the end of April? So this, in my opinion, like through this weekend and this first round of in-person negotiations, again, it's kind of okay. I don't know how they're going to go. I'm not going to try to pretend that I know what each side is doing exactly, because I don't. Like, that's just not something where anyone has any edge. But rather, okay, coming out of this weekend, do we start to see improvements in transits, or is it more of the same? That's the big thing, I think.
Yeah.
That's all I've got there. We got Fed minutes yesterday, Mike. Anything interesting from the March 17th, 18th meeting notes?
Look, I think the most compelling thing you can say is the same stuff that we heard about from those Fed officials, which is they're really unsure which of their dual mandates they should be most concerned about at the moment, and they feel as though they can't really do anything so long as there's a war in the Middle East. Was there anything more compelling than that to you? I mean, they seem stuck in this, hey, there's risks to the upside of both of our mandates, the unemployment rate as well as the inflation rate. We were seeing signs of higher inflation than we were comfortable with before the war broke out, and obviously that risk stays high, but hiring's been so weak that we have to be aware of that one too.
So, yes, and I think that's probably the appropriate place that they were at that particular point in time.
Mm-hmm.
I think it's also why they probably end up doing nothing at the April meeting in 3 weeks. It's April 29th is the next Fed meeting, and I don't think there's anything that's changed in either direction where they can say, yep, let's start cutting rates, or we need to hike. I do think that by the time we get to their June meeting, which is on June 17th, here's the data that they're going to have in hand at that point that they don't today. They're going to have 2 more jobs reports for April and May. They are going to have 3 more CPIs, March, April, and May. And they're going to have a pretty good idea as to what has actually been going on with, general commodity markets and supply chains and everything over the course of this year.
Yep.
That is the meeting where it's going to, in my opinion, be either, and what's interesting is basically nothing's being priced in here right now. I've never seen this where the next, I won't say I've never seen this, but it's been unusual to see in the last 5 years. The next 3 meetings, there is nothing priced in. It's a 98.4% chance that rates are kept where they are through the July meeting. In my opinion, though, that June meeting is underpriced in either direction. Because it's either going to be, hey, there's a real inflationary problem that is developing, and we need to deal with it because the labor market hasn't broken down, and you've got higher costs that are being passed through. Or it's going to be the higher cost structure is eating into other demand and is killing the labor market, and we need to start cutting.
I'm a little bit surprised that when we look at the year-end forecast for rates from CME, the probability hasn't really changed much over the last week. You have a slightly higher likelihood of a rate cut by year-end, but only by like 3 percentage points. So I found that piece to be interesting, too, that since this ceasefire, nobody's really changing their expectations for what the Fed's going to do. Interestingly, also, I would still be surprised, but I think there's an interesting possibility that Jay Powell is still leading that June 17th meeting at this stage.
Also possible. I want to use this as a jumping off point for talking about the labor market because here's the thing. At the beginning of the year, if you were to go back and listen to like our January 2nd show or whatever, you would have heard me saying, hey, right now the labor market is the bigger concern for me compared to inflation. Like I was saying, yep, you could fully justify additional cuts if you want. In the last 3 months, that has completely changed in my opinion. And it's because if you look at a number of data sets, remember, don't look at just one because one's going to give you nothing. The headline jobs numbers, Jay Powell's told you, stop paying attention to them. It doesn't matter how many jobs are created each month because the labor supply is seeing less growth than it ever has in the United States.
Yep.
Focus on the unemployment rate, which is flat over the last 6 months. Okay, if the unemployment rate is flat the last 6 months, why am I cutting rates?
Yeah.
Beyond that, if you take a look at what we are seeing as far as payroll tax withholding growth, it's back to a pretty respectable 4 to 5% range. Not great, not horrible, but fine. There's nothing concerning there in the last 3 months after a downward trend for the last 6 months of last year. So that's good. Job openings are flat for the last 6 months. They're not getting better. They're not getting worse. They're just sitting there. Continuing unemployment claims are now running not just below 2025 levels, they're running below 2024 levels. Like, we're talking, like, continuing jobless claims are 5% under last year's levels right now. It's telling you that the labor market, despite the slow hiring, is really tight because there's no one to hire. The baby boomers are retiring, and immigration is either flat or negative. Companies don't have anyone to hire. And so I think that the place that I land in then is over the next 3 months or so, I am far more concerned about the potential for inflation to become a more entrenched problem if we don't get a positive resolution on this ceasefire over the next couple of weeks. Positive meaning not like some kind of defined, like, signed, fully formed agreement. I don't think you're getting that quickly. It's going to take a while. But some interim step beyond where we are that allows for ships to at least flow through Hormuz. If you don't get that by the end of April, you've got some real problems. I put down that Cinco de Mayo marker at the beginning of this. If you're there and you don't have ships flowing through Hormuz yet, it's very quite bad is the technical term. So we'll see what happens there. But, the labor market, got to tell you, I know that hiring's slow, and I'm sure there's people out there that are like, Chuck, you don't know what you're talking about. Like, my nephew can't get hired, or I can't get hired, or this and that. Like, I get it. But the actual, like, what we're seeing as far as continuing, like, all the data I cited, there's no further deterioration. It's actually showing a tighter labor market than a year ago in some respects. So that's what we've got here with the Fed. Let's take a quick break here. When we come back, more on Anthropic's new model that they put out, or not put out, but discussed on Tuesday. They're not putting it out because it's too powerful for all of us to use. Is that just marketing, or is there a real thing here? We'll discuss when we come back.
Market insight, retirement strategies, real talk about Wall Street and economic trends. All live every day on our YouTube channel. Go to youtube.com/The Financial Exchange Show. This is The Financial Exchange. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Stay informed and prepared for market changes and breaking business news. The Financial Exchange is live every day on YouTube. Tune in, subscribe, and keep up to date on all of our show's content on a daily basis. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the DAV of Massachusetts. Register today for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
Yesterday, we talked briefly about Anthropic's new large language model dubbed Mythos, and basically what they said in a post on their website was, in a matter of days, the use of this for cybersecurity purposes found thousands of vulnerabilities across major platforms, to the point where they pretty much said, we're not releasing this to the public until we release it to a small consortium of tech companies first, so they can patch their software to the point where we don't think it's a major threat releasing this to everyone.
So marketing or reality? My answer is both.
Yes. It very much is something where I've talked to people in like the cybersecurity business, and they've basically been like, yeah, this is a legit problem based on like what they've seen from Anthropic on this. They're not BSing about this. It's a real thing, but it's also really good marketing. Yeah. Hey, we've got the AI so powerful that we can't release it to you yet.
We created
of course
a product
that sounds good.
So dangerous that we are going to tell you that it exists but not release it, because we frankly might get sued by a bunch of companies that get hacked because of it.
Now, sorry.
No.
Now this has also gotten me to another point in my AI evolution. I try to, with anything, you try to say, okay, here's where I am, and let's evolve from there, because everything changes. Nothing stays the same. So my original thing was, okay, like, AI's fun and it makes dumb mistakes, but I'm just not sure there's enough meat there. Around 3 or 4 months ago, as we got into the stuff with Claude Code, I started to look at it and say, okay, like, there's actually some meat there if you use AI to build things that can help you to do what you need to do instead of just asking it dumb questions or whatever. And so I said, okay, this is going to be something that's worthwhile to try to learn how to do. I've now done it's not a 180 again. It's different. I've now gotten to the point where for basically 99.9% of humans, I don't think there's any point in trying to learn those more advanced uses of AI, because quite honestly, the technology is evolving so rapidly that what was cutting edge 3 months ago is now already stale, and you are not going to be able to keep up with the people that live and breathe this every single day. And so I've kind of gotten to, let's just let the geniuses build how they are going to build, and then if they build really cool stuff over the next couple of years, we can use what they built because it's probably going to be better than anything I could build anyways. It's kind of where I've gotten to, just because things are evolving. It's okay, have a basic understanding and use case, because there are some places where you can do some useful things. But as far as really powerful things or any business that's talking about using AI, I just don't think you can keep up with how fast it's evolving, quite honestly.
The only part that I am humming about is leave some pretty open doors for really bad stuff to happen when nobody really understands what's happening. The example that I'm thinking about most recently did not result in anything really bad, but a few months ago we were talking about the Reddit-style social media platform for AI agents to talk to each other. Things like that are
I'm not saying
frightening.
Don't regulate the space. I'm saying...
Well, I'm saying that even what regulators are going to understand what's happening in the space?
No one, all I'm saying is the average person is not going to be able to keep up with what are new efforts in AI, and so anything that you're working on is going to be out of date by the time you finish it.
Yeah. By the way, I just looked up. I didn't know this existed, but S&P Global has a cybersecurity index. I'm trying to find the components of it, but it's the S&P Kensho Cybersecurity Index, and it is moving down about 3% today.
Well, here's the other logical extension there. Why would you sign any new contracts with software companies right now beyond what you are already running?
If I did, it would be a very short-term contract, and it better be really easy to implement in my company.
The term has to be short. The cost has to be low, because otherwise, how do you know that a year from now what you've signed up for is not out of date?
Right.
And I think that's a very reasonable place to be. So I've got that.
Yeah. It like I said, good marketing, but they've already seen a lot of cases where these tools are being used to obviously build up very more realistic phishing attempts and scam attempts. But on the more sophisticated side of things, I believe it all exists too, where they are using these tools to detect potential vulnerabilities in real big systems. And I will not be surprised if Anthropic has something real here.
Speaking of vulnerabilities in big systems, Brockton Hospital is forced yesterday to start using paper records because they had to shut down their computer systems due to what they saw as, quote, suspicious activity that began on Monday. We don't really have further details beyond this. It's unclear, any of the specifics, but Brockton Hospital is now using paper records to keep track of everything because something was going on in their computer systems that they didn't like.
Yeah, that happens almost every week in hospitals, right?
Yes, yes.
This is nothing new. Hopefully the staff and doctors there are pretty familiar with it because there seems to be, across the country, one hospital a week that is dealing with similar types of issues of records being taken down, denial of service attacks on records, and only likely to get worse over time would be my guess.
Has to be one of the hardest types of systems to secure because of the combination of sheer number of people that are in them, the amount of information flowing back and forth, and the speed at which you often have to enter things because doctors, as you know, are just incredibly busy and, might end up clicking the wrong thing and end up, clicking a link and this and that. It's... again, you can see easily how these systems become compromised. Let's take a quick break, but we got hour 2 coming up in just a little bit on the Financial Exchange.
When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
One of the most helpful things you can do for your family is to make sure that important information about your life is organized and easy to find. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Financial accounts, legal documents, and insurance policies are all part of a complete financial picture. When that information is scattered in different places, it can be difficult for loved ones to step in and help if a crisis occurs. Our new guide called Building Your Emergency Financial Binder will show you how to organize the most important details of your financial life, including key contacts, retirement plans, investment accounts, and insurance information. Call 800-393-4001 and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request the guide by visiting ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your brand new guide, Todd, How to Leave Assets to Your Beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right, you can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return. Number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker here, and as we kick things off, we've got stocks basically stuck in neutral. The S&P's off 8 points. Dow's off 134 points. NASDAQ's off 25. So about 0.1% to 0.3% decline across major U.S. indices today. 10-year Treasury selling off a touch as well. Up 2.4 basis points to 4.315%. We got the dollar index down 18 basis points to 98.745. Gold is up 13.20 an ounce to 47.90 and 40 cents. And we've got crude oil back on the move up. West Texas Intermediate up 7.54 a barrel to 101.95, so back above $100 a barrel. This as we are now into day 2 of the ceasefire in the Middle East. And meetings are scheduled to begin on Saturday in Islamabad. We'll see how things go. The next few days are going to be pretty critical in determining, in my opinion, what happens through the region as far as a resumption of transits and oil production. At the moment, you're getting all kinds of conflicting reports about, what may or may not end up happening. So, again, take it all with a grain of salt. See how things go. To this point, we have not seen any meaningful uptick in ships heading through Hormuz, but that can obviously change depending on how things go over the next several days, both for the positive and for the negative. We just don't know, and we're going to have to see how things evolve, and we'll take it from there. Fair?
Yeah, I don't have much else to add. Again, actions speak louder than words. We will see where things go. Worst case scenarios were taken off the table on Wednesday, and I'll take that as a positive, but we have to wait and see.
Let's talk about this piece from the New York Times. It's interesting, and I want to get a sense of whether it's real or not. It's titled, Blue-Collar Work has Plateaued, Narrowing Options for Young Workers. And what it's talking about is that the number of job openings in manufacturing jobs have gone from about 900,000 several years ago down to around 400,000 today. And I think that, yes, I would argue just about ever as far as negotiating power for employees versus employers. Yeah. And as we sit here right now, other than a brief period in 2018, we actually have the highest level of manufacturing job openings in the last 25 years still, if you exclude that 2021-2022 period, which I think we all can say was kind of an outlier that's probably unlikely to ever be repeated.
Yeah, so other pieces are cited here. Jobs in sectors that include the trades such as manufacturing and construction have racked up roughly 150,000 net losses on an annual basis as of March, which I find interesting, but you do have to ask how much of that is because of a lack of interest in hiring versus how much of it is deportations and just general concern among that industry that is pretty heavily performed by either first-generation Americans or those without legal work permits in the United States. So I'm just not willing to jump to the conclusion that there's suddenly a lack of need for skilled trades workers.
No, I can tell you, I talk to anyone, again, my level of handiness around the house, it's a 3. I can paint, I can put shelves in, I can do drywall, I can do some stuff. I can put a toilet in. Anything, beyond that, I'm nope, it's going to cost me more, to fix the house once I break it than if I do it. So I use, contractors for a lot of stuff that, a lot of people would probably be Chuck, you could do that. It's no, I know my limits. I can do some stuff, but as soon as I start getting into electrical or anything where there's, plumbing more complicated than a toilet involved, no, we are not touching it because I'm going to break something. And I've yet to find someone in the last few years who's been yeah, you know what? It's really easy for me to find the labor that I want.
True.
you talk to any of them, and it's...
That skilled handyman is not easy to come by.
It's just like, it is hard to find good help in the trade still. And there can be a number of different reasons for this, but I think that is still the message that I am hearing is, yeah, I've got plenty of work, and I just can't get through all of it because I don't have enough help.
Yeah, I'll even say, like, I can't think of a single instance where somebody's told me about a renovation they're planning and come back and said, yeah, and I was pleasantly surprised by the price.
Right, like, oh, the price was low and they finished ahead of time, ahead of schedule.
Maybe that's just never the case, but it seems especially true today that every time I've heard of any major or minor project that somebody wants to do to their home, the almost universal response I get is, dear God, it was so much more expensive than I was anticipating.
So I think that this is a piece that doesn't really capture the realities on the ground when it comes to, I think, what we're seeing in this space. It's entirely possible that I'm completely wrong. Mike, what's the text line?
617-362-1385. So if you feel that Chuck is wrong, or more realistically, if you have indications that the labor market for skilled tradesmen is slowing in some meaningful way, let me know. I guess the one piece of evidence, Chuck, that I'm comfortable pointing to is home construction.
Sure.
That is clear that has dropped off. But again, we're talking about dropping off from a really fast pace of labor market activity across the board, which was 2022 and 2023. And so maybe we're just normalizing here a little bit.
It's possible. Yeah, it could be a normalization that we are seeing. Let's take a quick break. When we come back, we've got trivia, and then we'll talk about why BlackRock... What?
And we're joined by Jeff Ostrowski from Bankrate. He's going to be talking to us about actually kind of this subject, the housing shortage and what some states are doing to try and address it. That's next here on the Financial Exchange.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed right here on the Financial Exchange.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Stay connected between shows. Follow the Financial Exchange on Instagram for daily clips on business news from New England and around the country. This is the Financial Exchange.
All right, time for trivia here on the Financial Exchange. And on this day in 2012, The Lion King became the highest-grossing Broadway show of all time. The Lion King has grossed over $2 billion since its debut. So our trivia question today: which Broadway show held the highest-grossing title before The Lion King surpassed it? Once again, which Broadway show held the highest-grossing title before The Lion King surpassed it? Be the fourth person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia. You win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
BlackRock, they have a chief investment officer for international markets by the name of Helen Jewell. And she has a quote in this piece from Bloomberg that reads as follows. If you look at earnings forecasts at the moment for the year, they're well into double digits, 15, 16, 17, 18%. So there's a bit of headroom for earnings to come down a little bit. Forecasts for stable earnings in the consumer sector are hard to reconcile, particularly if you think about interest rates and the inflationary impact of what we've seen in the Middle East. So look, here's the deal. FactSet Earnings Insight does indeed confirm the calendar year 2026 earnings growth in the S&P 500 is estimated at 17.1% right now. I have no idea if that's going to be right or not. I am not a bottom-up analyst. I don't look at every company in the S&P 500 and back into what it means for S&P 500 earnings growth. So I have no idea if that is high, low, or just right. As such, I can't really evaluate, the statements by Helen. But, yeah, there's obviously room for earnings to get worse if problems in the Middle East continue. There's room for earnings to get better if AI proves that we have all kinds of, productivity gains and the Middle East situation calms down. And I'm not in any position to be able to say these earnings estimates are too high, too low, or just right.
Yeah, I mean, look, it's interesting to play the sector-by-sector game and wonder about U.S. energy companies and how much their earnings growth could increase compared to major tech companies and potential slowdowns there. But in the aggregate, I guess the most I'd be willing to say is if we're looking at earnings estimates from a quarter ago and holding them steady now, I would think that there's more downside to those estimates than there is upside given the disruptions in the Middle East.
Yeah, and
that's as far as I'm willing to go.
What I do have, so I've got the earnings estimates for this year if you want to go through them.
Okay, hit me.
Do you want to start from the top or the bottom?
Meaning best or worst?
Yeah.
Well, let's go with the worst.
Okay. Real estate at the beginning of the year. The good news, this compares it to estimates on December 31st, so we can see how they evolved. Real estate, previously estimates were at 5.2% growth this year, now 4.3%.
Makes sense.
Sure. Consumer staples from 7.2 to 6.1. Okay, fine. Like,
Yeah,
you know,
have
fine.
slightly less cash to spend, I guess. Yeah,
Sure. Healthcare from 8.4 to 6.9. I don't know. I've got
Don't
no insight.
understand it.
Fine, whatever. Industrials from 15.1 to 8.6. Totally get it. Input costs are going through the roof there.
Yep.
Gotcha. Consumer discretionary from 11.5 to 9.1.
Meh.
Okay, maybe can get worse. Like, yeah, like, sure. Financials, 9.4 to 9.4. That one I'll put a big red flag on in that, hey, that is not pricing in any private credit problems. Big potential for things to get worse.
Sure.
Utilities from 11.5 to 12.3. Basically, I think the read is utility input costs are going to go higher, but they're going to be able to pass those through in higher rates. Okay. Sure. Communication services, 14.3 to 13.6. Okay, so you're telling me that either communication service, again, you're telling me that like Google and Meta are going to make a little less money, or Netflix will, or Verizon or T-Mobile. Like,
remember here,
what
folks,
a mess of a
that-
sector. I don't know what to do with it.
Yeah, remember here, folks, that everybody thinks of communication services being AT&T and Verizon. It's not. They are in there, but what actually matters are, like Chuck said, Google's parent company, Alphabet, and Facebook's parent company, Meta.
Energy has gone from 6.4% earnings growth this year to 19.1%.
Yep.
Not unexpected. Highly volatile. I'll still, push comes to shove, I'll pound the over on that.
Okay.
Let's see. Materials went from 20.6 to 29.4. This one's tough just because I do wonder how much earnings growth is restricted by a lack of inputs for materials companies. So I don't know what to do with it, but it's gone up and it makes sense intuitively. Technology has gone from 28% earnings growth to 37%. Okay, like, people are going to buy the AI chips. Sure. Like, it's tough to fight that estimate right now based on what we're seeing because there still hasn't been a meaningful inflection downward in the number of chips sold.
Yeah, the narrative did change, I think, compared to end of last year in terms of the disruptive nature of the technology.
Sure.
I think that narrative definitely changed from where we were in the fourth quarter of last year compared to end of February before the war broke out. It went from, oh, look at these valuations to, oh, maybe I don't care about the valuations because look how many companies this is going to disrupt. So we'll see.
So that's what we've got going on earnings-wise. Let's see. What else do we want to touch on here?
Amazon and U.S. Postal Service reached a new deal on deliveries after a few years of talks. So if you're not familiar, you probably are familiar, but the U.S. Postal Service delivers I think the term is metric crap ton of Amazon packages for the last mile delivery here. And they went over the last few years kind of bid this stuff out. Amazon has been across the board bringing more of their end mile deliveries and overall deliveries in-house, taking away business from FedEx. Well, FedEx, I think, took it away from Amazon, not the other way around, but UPS and the U.S. Postal Service. They landed on a place here where Amazon would ship 20% fewer packages through the Postal Service, which, there was a threat of a 60% reduction, so I guess that's better there. And I don't claim to understand the financial complexities of this and the U.S. Postal Service and, how USPS makes money here, but the plain, simple explanation is if the government is going to mandate this government agency to deliver packages to every end address anyway, then I think they look at it as why not carry some Amazon packages with us while we go.
Makes sense. Mike, I want to talk about this piece that Tucker put it in the stack yesterday, and then it showed back up in the stack today. And so whenever Tucker
means something.
Whenever Tucker puts something in the stack for a second day that we didn't cover, it's like, okay, we need to cover it or he's going to just keep putting it in the stack.
No, I give it 2 days usually.
I know. But so it's this piece from the Wall Street Journal, the economic divide behind that McDonald's CEO viral video. First question that I asked when I saw the headline, what viral video were we talking about?
We're talking about the...
Are you serious?
Yeah.
Oh, man, every CEO copied this one. It was where the marathon-running McDonald's CEO filmed himself taking a bite of the new Big Arch burger and took the wimpiest bite that I have my daughters take bigger bites than
it was
this
like
kid,
a
and
nibble.
They're 9.
So I know this now.
He was mercilessly mocked all over the internet, and every CEO of any food company, including the Costco CEO, filmed themselves taking giant bites out of their own food products.
Yeah, like Burger King, Wendy's, go down the list. All the CEOs were just
I've been a little preoccupied with like the Middle East, so I honestly...
This was the only other news story
I had
that
no
mattered.
idea this happened. I had no idea this happened.
This was like a month or so ago. Yeah.
I know. It says it was on March 4th,
Yeah.
which was, again, kind of right as it was hitting the fan.
Yeah.
I had no idea this happened until I read this piece.
Yeah, sure. It was pretty big news.
Which also tells you, like, my news feeds on Twitter don't really
Your
fly
algorithm's
in these
different
circles.
than
You
mine.
know, it's like...
Have you heard of K-pop demon hunters?
I have, but not on my Twitter feed.
Yeah, fair.
You know,
Fair.
it's like... So this caught me off guard, like, just seeing this. I was like, okay, like, Tucker put this in, like, what's actually going on here? And then this piece, though, is not actually about the video in any way, shape, or form. It's more K-shaped economy crap.
Yeah, basically making the argument that, you know, the new products from McDonald's are too expensive, and that's why the guy's getting backlash. I'm not so sure.
No, he's getting backlash because he looked like a wimp.
Yeah, he looked like a little schmeeb, and
he looked like the CEO of a burger chain who doesn't like burgers.
Because he probably doesn't.
Well, isn't that kind of, to be fair, isn't that a problem?
Yeah, I think all in it probably is a problem, but he was brought in for a very specific reason because there was some shenanigans going on at the executive level of McDonald's, and they kind of cleaned house and brought in a guy that was not part of the shenanigans, and said guy happens to be a really health-conscious marathon runner by all accounts, and maybe genuinely doesn't like McDonald's food as much as he should.
Which would seem to be a problem if you have a disdain for your own product. Let's take a quick break. When we come back, we've got the trivia answer and Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Building Your Emergency Financial Binder. Mike, when we talk about the type of information that should be in there, what kinds of things should people be including so that a loved one or family member can help to keep their finances in order?
Yeah, I think, on the financial side, it's what do I have and where is it?
And how do I get access to it?
Right, and so that can mean getting access to online passwords and things along those lines, but obviously how you share this stuff is extremely sensitive given the threat to being breached down the road. And so mainly it is, though, what is the snapshot of my financial, health, and legal life, and how do I format it in a way that people can actually interpret it?
And I think another piece there is that is also always changing. How do I let people know what changes I've made and when I've made updates to it? Because I might not have the same accounts that I used to.
Right, and the guide does lay that out of, hey, how do I document changes in here? Because you might not always have that old account at said financial institution. It could change, it could shift, you might retire, and keeping this thing up to date is critical. Obviously, the more stuff there is out there, the more complicated this becomes. And so as much of it as you can check off the list while you're still around and able to explain it is extremely helpful.
The guide, again, is titled Building Your Emergency Financial Binder, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets have shifted and are now edging higher, with oil jumping again today after Iran accused the U.S. of breaching their ceasefire agreement. Investors also readying for tomorrow's consumer price index for the month of March. Right now, the Dow's up just over 0.1%. S&P 500 is now up about 0.25%. NASDAQ up 0.3%. Russell 2000 is flat. 10-year Treasury yield flat as well at 4.295%. And oil jumping 7% higher, trading at $101 a barrel. Shares in AI computing company CoreWeave are now edging higher after earlier losses after the company announced a $21 billion expanded infrastructure deal with Meta. Meta stock is now climbing over 2% higher. Meanwhile, the Wall Street Journal reported that Disney is planning to eliminate as many as 1,000 positions in the coming weeks. In one of the first significant moves under new CEO Josh D'Amaro, Disney now off by 1%, and shares in Modelo and Corona beer maker Constellation brands are rising 6% despite the company withdrawing its guidance due to uncertainty and reported subdued demand. I'm Tucker Silva, and that is Wall Street Watch.
Joining us now is Jeff Ostrowski from Bankrate, talking to us about the national housing shortage and what states are doing to try and address it. Jeff, thanks so much for joining us. Appreciate it.
Hey, good morning. Thanks for having me.
So I guess first things first, are there some policies that a lot of states seem to be agreeing on when it comes to more dense housing construction at the moment? I seem to see a lot more states, for instance, accepting ADUs, accessory dwelling units, to be built.
Yeah, that's true. So California, the biggest state, it has legalized ADUs, and so now you drive around in neighborhoods in Southern California, and it's not unusual to see that somebody has built a one-bedroom apartment in their backyard. So yeah, ADUs or accessory dwelling units, also known as mother-in-law suites or granny flats, so that those have become more common. And that's, that does provide some supply. It's probably not a total solution, and I don't know that anything is a total solution.
Right.
But there is this growing realization that, the decades of building huge subdivisions filled with starter homes are gone, and that if we want our kids, if we want young adults to be able to live somewhere, we're going to have to figure out how to build more housing.
What other solutions are being talked about? We're broadcasting from here in Massachusetts, where I know they have made ADUs more accessible. I know that there has been a law around building more dense construction around public transit. At the same time, there is a bill making its way to the House for rent control. And so I think clearly housing affordability is on folks' minds, but I'm wondering, is there a way that blue states versus red states are addressing it, or is it not really that type of political issue today?
It is. You just mentioned one of those ideological flashpoints, which is rent control. I don't think there's a single red state that has rent control measures. There are a lot of blue states that do, notably New York and California. Although the rent control seemed to happen more at the city level as opposed to the statewide level. But there's one interesting possible reform coming to Massachusetts. This is the move called legalized starter homes, which is a ballot question proposed for later this year that would allow or essentially require municipalities to approve single-family homes on much smaller lots. The idea would be that if this were to go through, then municipalities would be compelled to allow builders to build, home buyers to buy single-family houses on lots as small as 5,000 square feet. And just for perspective, it's so some suburbs will have quarter acre minimum lot size. A quarter of an acre is just over 10,000 square feet. So this would be like, half the size, less than half the size of a standard quarter acre lot.
Florida has obviously seen massive migration over the course of the last 5 years during COVID, big beneficiary of migration down to that area. How are they addressing, another real housing shortage there?
Yeah, so Florida definitely is not doing rent control as a red state. That's not on the table. Florida has done something different. It's a state law called Live Local, and this allows developers of apartments to get a lot of permissions they wouldn't otherwise get. So they can build more density, they can build higher, they can get easier approvals without a whole lot of pushback from the municipality, at least in theory. And the trade-off is that some of those units have to be set aside for people making about the median income of the local area. And so that there have been a few projects built under Florida's Live Local law. There have been many more proposed, but either not out of the ground because they just haven't started yet, or not out of the ground because the local municipality is suing and saying, hey, wait a minute, this is way too much for this area. The acronym is NIMBYism, not in my backyard, and that's been sort of an ongoing drag on housing supply. And so this is, this Live Local law was trying to be an end run around NIMBYism, but the NIMBYs still can have their day in court. So I think, as I mentioned earlier, there's no perfect or easy solution. So Live Local is adding some housing inventory in Florida, but I think its proponents want it to add a lot more.
Jeff Ostrowski is from Bankrate, joined us today to talk about the housing shortage and how different states are addressing it and trying to push back against the NIMBYism that has partially driven prices so much higher. Jeff, thanks so much for joining us. Appreciate it.
All right. Thanks a lot. Much appreciated.
All right. We asked you the trivia question in the previous segment. Which Broadway show held the highest grossing title Before The Lion King surpassed it, well, that would be The Phantom of the Opera. Neil in Madison, Connecticut is our winner today, taking home the Financial Exchange Show t-shirt. Congrats to Neil. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Let's see, Mike. Do we want to talk about IRA contributions for 2025?
Let's do annuities real quick,
Sure.
if you don't mind. So
Yeah.
we've talked about 401k changes and what might be coming there. And, private credit could be one of those things. But more close on the horizon seems to be annuities in your 401k. And I think this, more than any other area, is where implementation is going to be critical because there's a few different ideas that are being talked about. One is a pretty straightforward process where, as part of, for instance, a default election to a target date fund, they would portion some of that into a guaranteed for life pension-like payment. And so it would effectively allow you to have that within the 401k plan. Still have a lot of questions about practically how that would work with job switching and things, but I can at least understand where people are coming from. On the other hand, there is this discussion of, hey, just put a bunch of stuff out there and let people choose. And boy, that's already tough with mutual funds. I am here to say that I think it's going to be darn near impossible for the average consumer to navigate that when it comes to annuities.
What makes it that much tougher, in your opinion?
So for those not familiar, annuities come in so many different flavors and with so many different complicated features and costs that even for, go talk to people that you consider a financial expert and ask them to explain to you the difference between a fixed, indexed, variable, and immediate annuity. And they'll ask for probably an hour of your time if they can explain the difference.
Yes.
It just takes that long to fully understand it, and that's from somebody that lives and breathes it. And so these things get so incredibly complicated that when put in as just a menu option of selections, I have some pretty big concerns. There already are annuities in some types of retirement plans, and I've seen the downsides to them firsthand when people just don't really understand what it is they have. And lo and behold, I can't get out of this thing for a decade now. If you have questions about insurance products and annuities specifically, how do they work? What am I being sold? What exactly do I have here, and is it actually for me? Armstrong Advisory Group does not do a lot in this space, and specifically there are certain types of annuities that we actually can't and don't get involved with, but we have the knowledge and can talk to you about what the universe looks like these days for all sorts of insurance products, because guess what? They are always extremely complicated. It's not to say that they are always bad, but it is to say that they're complicated, and you have to fully understand not only what you might be considering, but what you already have. If you have those questions, give us a ring, 800-393-4001. Again, that's the number for the Armstrong Advisory Group, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's take a quick break. When we come back, we'll do a little bit of stack roulette.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
From Fed decisions to market moves, watch the Financial Exchange live on X. This is the Financial Exchange.
Get your questions in for the Money Matters mailbag tomorrow around this time on the show. If you got questions for Chuck and Mike, just shoot us a voicemail to 339-399-4333. Once again, that number for the Money Matters mailbag is 339-399-4333. Or you can email the Money Matters mailbag to tfeshow@gmail.com. Once again, that email is tfeshow@gmail.com, and we may use it on the show.
Mike, can I double dip for Stack Roulette to kick things off?
Sure thing.
I want to start first with this piece on Meta and their new AI model that they announced yesterday. Did you happen to catch the name of it?
I did, and I already forgot it.
It's called Muse Spark. Why? Which is a bad name in and of itself. But now I want you to say it with the corporate name in front of it.
As Mark Zuckerberg.
Meta or Facebook?
Meta.
Meta Muse Spark?
They named the thing Metamucil.
Yeah, I kind of did.
What a bunch! Like, are you kidding me? You're trying to be like, oh, we're cutting edge, and you are literally half a syllable away from naming your AI model Metamucil.
Be sure to get your fiber.
I mean, I'm sorry, but you just can't do that. Now, apparently, the model's fine and this and that, but again, like, models that are fine are commodities these days, and this continues to be something where I'm like, okay, you guys keep saying you're going to spend more on data centers. How are you going to actually make the money on this?
Does it really seem to anybody else that since Sheryl Sandberg, is it Sheryl Sandberg? Is that her name? Since she left, there just don't seem to be any human adults left at that company.
Metamuse Spark. Wow.
I mean, again, Zuck now is an adult. I just don't know that he's human.
It's fair. Well, the new version of him is an upgrade.
Yeah.
Also, I want to talk about this Wall Street Journal exclusive that Tucker just pointed me towards. This just came out at 10:38 this morning. Justice Department opens investigation into NFL.
We talked about this on the show earlier this week. I assume it has to do with TV contracts?
It does, and basically it's saying, look, we don't have any specifics yet, but the Justice Department has opened an investigation into the NFL and whether it is engaged in anti-competitive tactics that harm consumers, according to people familiar with the situation. And specifically, talking about how, expensive it is to get all of the platforms and this and that, and it's hard to watch and blah, blah, blah. You got to use all these different apps, yada, yada. So, two things can be true at the same time. Number one, I freaking hate how hard it is to watch sports these days. If you want to watch anything, whether it's football, baseball, basketball, hockey, you've got to have 6 different apps on 14 different TVs.
Today, golf.
Today, just golf today. Yes. What is it? You need like 3 apps to watch the Masters?
Well, now Amazon is airing it now, but then you got to go to Masters.com before 3 o'clock, and then ESPN picks it up. Apparently, it's on ESPN Plus this morning.
Yes.
I don't know. It's a mess.
So two things are true at the same time. It really sucks trying to figure out where all of this stuff is and actually being able to view it. It's also not worthy of Congress's time.
So I don't think so either, but what I was pointed to is the fact that the NFL was previously granted basically an antitrust exemption.
Yes.
For the way that they negotiate. And, I mean, given that Congress had to step in initially, you don't think that maybe that should be looked at occasionally?
Which part?
The antitrust exemption that was provided to them. Like, if they are taking steps that you can point to that harm consumers, I'm with you. Maybe it's not worth the time, but you exempted them from a bunch of laws in the first place, and if they are changing their practices, then I don't have a lot of patience for that.
I guess what consumer harm is there? Like, you don't. It's the NFL.
Yeah.
It's entertainment.
It's not a necessity.
It's.
Yes, it is. Damn it.
I can't really get there, and ultimately, here's the other piece that I'll take you towards. Let's say there were no antitrust exemption for the NFL, which the way it works is all of the teams can act as one organization in order to negotiate rights deals.
Yep.
That's basically what the exemption allows for, and that they can share the revenue equally. It has nothing to do with labor between players and the league. It has nothing to do with any franchise relocations, nothing to do with merchandise, ticket sales, or anything like that. The only thing that it's there for is to try to allow for the negotiation of rights contracts across different platforms.
Yep.
Let's envision a world in which all 32 teams say, okay, great, we have to negotiate these on our own.
Yeah, it might be more harmful.
Do you think it's going to be easier or harder to find those 32 teams on TV?
Yeah, probably tougher.
Like, that's where it's not going to make it easier.
Yeah, I might have just,
they're all just going to be like, what are you going to do? They're all just going to negotiate the same deal? No, you're going to get, the Packers are going to be like, well, we're owned by our season ticket holders, and so we think that the best thing is actually no TV except for we're gonna broadcast the games ourselves, and you've got to pay us. And then the Jets are going to be like, well, if you're outside the New York market, here's what you pay to watch Jets games. because, we're the Big Apple. And then the Jaguars are going to be like, no one wants to watch our games, so we're going to pay you to watch them. We're going to pay you to watch our games. Like, it's just something where it's not going to make it easier, in my opinion.
Yeah, fair.
And it's, broad scheme of things, as annoying as it is trying to figure out where to watch sports, it's not in my top 1,000 list of problems that Congress should be dealing with.
That part's fair. Yes.
Go
fix Social Security.
Go figure out Social Security before you start telling me what channel the NFL is going to be on.
Yeah, we can agree on that.
Taking a look at markets, we've got a little bit of a rally taking hold as markets now up about 1/3 to 0.5% over the course of the morning. We'll see where things go over the remainder of the day. We're going to take a quick break for the rest of that day, but we're back here tomorrow, and we'll finish up the week then.